Welcome to the deep dive. Sometimes in finance, you just hit these situations that make you kind of stop and go, wait, what is happening here?
Uh-huh.
That's definitely how we felt looking into Siyata Mobile Inc. That's ticker SYTAT.
Absolutely, yeah. One of our listeners actually flagged this one, sent over a really interesting pile of information.
Right.
So we've dug through it, tried to pull out the really key insights for you.
So our mission today, it's pretty straightforward. Cut through the noise, understand this. Well, this huge shift Siyata is going through.
Yeah, it's not minor.
No way. It's a fundamental change driven by this merger that's coming up with Core Gaming Inc. We really want to unpack what this means for Siyata and, what the future might hold for this combined company.
We've looked at it all, really. The businesses themselves, the management, the financials, market sentiment, ownership, and the risks, of course. Try to get the whole picture.
Okay, get ready, because this story, it has some surprising turns. By the end, you should have a much clearer idea of the key takeaways. All right, let's dive in. Chapter 1, business understanding.
Okay.
At its heart, this whole thing is about a complete identity swap, isn't it? Siyata Mobile, they've always sold those rugged push-to-talk over cellular PUFA devices, right? And accessories, mostly B2B.
Exactly. That was their thing. And now they're merging with Core Gaming.
It is completely different. An international AI-driven mobile games developer and publisher.
Yeah, total switch. Siyata's old business, it was all hardware.
Yeah.
Tough Provos handsets, stuff for vehicles, signal boosters.
Who are they selling to mostly?
Enterprise, first responders.
Mm-hmm.
And they sold through the big mobile carriers, mostly here in North America. But, and this is key, that business model, it was facing serious problems. Big financial losses, which really frames this Core Gaming merger as, well, as strategic necessity. That's how some reports put it.
Okay, that makes sense. And Core Gaming is like the polar opposite.
Pretty much. Software and AI, that's their focus. Free-to-play mobile games. They make money from ads, in-app purchases, subscriptions, the usual mobile game stuff.
Right.
What's interesting, though, is their tech angle. They have this AI platform they say speeds up game development, like significantly. Maybe 40% faster, some sources claim. Lets them pump out more content.
Okay.
And they use a business intelligence platform, too. Analyzes marketing, targets players who are likely to spend money. It's all about using data.
So post-merger, it's barely recognizable as Siyata. Core Gaming shareholders get what, like 90%?
Around 90%. Yeah, that's the expectation. Siyata's original PRC business will probably stick around, but it's a subsidiary. Yeah. Mark Seelenfreund leading that part.
And the big boss.
Yeah.
The CEO of the whole thing.
That'll be Eitan Zakrin. He's the current CEO of Core Gaming. So yeah, it's a total overhaul of Siyata's identity.
Wow. The main way they make money just flips. From hardware sales to mobile game monetization.
A complete 180.
Okay, let's get specific. Legacy Siyata products, we're talking rugged handsets like the SD7, the SD7 Ultra 5G. And didn't they have a T-Mobile partnership?
Yeah, the T-Priority service.
Yeah.
Important for first responders needing reliable comms. Plus, those in-vehicle devices, boosters, accessories. The theme was always toughness and that push-to-talk feature.
And Core Gaming.
A whole different ballgame. They've got this huge library, over 2,100 mobile games.
2,000.
Yeah, massive.
Yeah.
And they just launched this AI comic app. Uses AI to turn photos and videos into different art styles. Apparently got almost 300,000 users really fast.
Huh. Interesting.
Plus, they offer their AI game development platform to other developers, too.
So market position before this merger, Siyata was pretty small fry in telecom gear, right? Low market cap.
Very low, yeah, before the merger news hit.
Yeah.
Served niche markets, first responders, transport, that kind of thing.
Yeah.
They did have those carrier stocking deals, though. And the Bursi market itself, it's not small. $33 billion in 2023, projected $84 billion by 2032.
But Siyata themselves weren't huge within it.
That's exactly. Core Gaming, though, operates on a much bigger user scale. 43 million monthly active users.
Wow.
790 million total downloads across 140 countries. Their revenue was $57 million in 2023, estimated around $91 million for 2024. And they're in that massive global mobile gaming market, $126 billion projected for 2025.
And the merger valued Core Gaming at what?
$160 million. The one independent valuation put it higher, closer to $186 million. So big difference in scale.
Okay, value proposition. Siyata's was reliable, rugged comms, like replacing old LMR radios.
Precisely. dependable instant communication for tough jobs. Core games is broader. Entertainment for players, obviously, with that huge game list.
And for developers.
That AI platform. And their overall edge comes from using AI for efficiency, making money. Their mission is ambitious to be the leading global AI-driven gaming company.
So the core question, what did they do? How did they make money? Pre-merger Siyata. PPOC hardware sales. Post-merger. Mobile game monetization.
Total flip.
Yeah.
And look at Core Gaming's numbers, 43 million MAU, 790 million downloads, 2,100 plus games. Revenue went $13 million in 21, $39 million 22, $57 million 23, estimated $91 million for 24.
And projecting higher.
Much higher.
Yeah.
$146 million projected for 2025, $241 million for 2026. That rapid growth is really central here.
Okay, let's shift to section 1.2, industry analysis. Can understand the markets they're in, right? PPOC and mobile gaming.
Absolutely. The PPOC market, Siyata's legacy space, steady growth predicted. We said $33 billion, $23 to $84 billion by 2032. That's over 11% CAGR.
And the cellular part is fastest growing.
Yeah. Driven by that move away from older LMR tech. It's like a $7 billion opportunity there.
And mobile gaming, the new focus.
Just huge.
Yeah.
And still growing fast. $126 billion in 2025, maybe way more by the end of the decade. Driven by smartphones everywhere, free-to-play being dominant, 5G, AI getting integrated.
Where are the big markets?
Asia's massive, China especially. Then the US, Japan, South Korea.
Competition. Pupo said specialized guys, plus big players like Motorola.
Right. Siyata tried to stand out with ruggedness, vehicle integration, those carrier relationships. Mobile gaming, though, insanely crowded.
Giants like Tencent.
Tencent, Activision Blizzard, Nintendo, Zynga. Tons of smaller studios, too. It's interesting, there's this idea of co-opetition, like Apple even could be a competitor, but also a client for Core's platform.
So Core's differentiators are the AI and just the sheer number of games.
That seems to be the claim, yeah. Their AI tech and that huge portfolio.
What about regulations?
PUC's mostly telecom standards, carrier certifications, FirstNet in the U.S. for first responders. Mobile gaming, that's getting way more complex.
Like what?
Content rules, user safety, data privacy is huge. Monetization stuff like loot boxes, platform rules like the EU's DSA, ad guidelines, and specific rules in places like China. Global compliance is going to be a big job for core gaming.
Barriers to entry. What stops others just jumping in?
PUC needs technical know-how, lots of R&D cash. Siyata spent $20 million just getting carrier status, plus carrier certifications, building trust, especially with public safety.
And gaming.
High marketing costs to get users, platform fees to Apple and Google, building a brand, keeping players, plus the tech side game engines, servers, AI, and scale helps a lot. Core's AI and user base might give them a leg up on some of that.
So long-term future for both industries. Looks okay.
Yeah, seems so. PPOC has the LMR transition. Mobile gaming has strong growth drivers, but the merged company's future, that really hangs on making it in mobile gaming.
All right, section 1.3, competitive advantage, the moat. How strong is it for legacy Siyata and for core gaming?
Brand strength. Siyata had some niche recognition, first responders, enterprise. Uniden for the boosters has some name recall. But overall, limited, not really a strong moat.
And core gaming. Is core gaming a known brand?
Not really to consumers. People know game titles, maybe. Their focus seems more B2B or investor-facing. AI comic app is getting some buzz, but the umbrella brand, low strength right now.
Okay. Cost advantages. Economies of scale.
Siyata. Unlikely. Small scale, financial struggles, probably cost disadvantage.
Makes sense. Core gaming.
There's potential there. That AI reducing development costs, if true. And the scale 43 million users for marketing, data analysis. Their own BI platform for targeting ads. That combination could lead to cost benefits.
Network effects.
Siyata's PUC. Maybe within a single company's fleet. Not significant. Core gaming. Much more potential.
How so?
Cross-promoting within their 2,100 games, social features, and crucially, data network effects. More users, better data, smarter AI, better games, more users.
That cycle. The AI predicting what you'll like next is key.
Switching costs. Easy to switch from Siyata's gear.
Moderate for businesses. Hardware cost, installation, training, integrating systems takes effort.
And switching from Core's games.
Low for individual free-to-play games, usually. But maybe higher if you're invested in an account, made purchases, or for developers using their platform. And that AI predicting your next game might make you stick around longer, subtly.
Unique assets. Special sauce. Siyata had specialized, rugged PPC knowledge, some tech patents, those hard-won carrier relationships, $20 investment there. Valuable, but clearly not enough on their own.
Core gaming's unique assets.
What's more substantial on paper? That proprietary AI stack development, marketing, analytics, monetization. The AI comic app is their showpiece for that. Plus the huge game library, the user base providing scale and data, their BI platform for ads, the whole monetization ecosystem. It's the AI and data ecosystem that's their core claimed advantage.
So, bottom line, what makes these hard to copy?
For Siyata, it was the specialized hardware, the PICO-C tech integration, and mostly those carrier deals, very time and capital intensive.
And for core gaming?
Replicating that whole integrated AI system, the massive user base and data, the huge game portfolio, and the monetization setup, all working together at scale, that would be really tough and costly. It's the synergy, especially the claimed superiority of their AI, that's the key barrier they're hoping for.
Okay, Chapter 2, Management Evaluation. Critical to understand who's running the show, especially through this huge transition.
Absolutely. Post-merger, the top spot goes to Eitan Zakrin, Core Gaming's CEO. Mark Seelenfreund, Siyata's current CEO, will run the PICO-C subsidiary.
Let's look at Zakrin first. Track record.
Pretty impressive growth at Core Gaming users, downloads, games, revenue, all up sharply. He also co-founded a biotech, Fuse Science, that went public. So he has that IPO experience.
Elephant.
Yeah, and Core's big revenue jump followed an acquisition, Nubiera, so M&A experience too. The big question for him now is sustainable profitability, not just growth.
Right. And Mark Seelenfreund.
Founder and CEO of Siyata. Yeah. Finance background. He did get those carrier partnerships, which was crucial for Siyata. But his time as CEO saw constant losses. The stock price tanked, leading to this merger being necessary. His role is smaller now.
So experience leading a public company, but the financial performance wasn't there?
Exactly. That's the context.
How have they handled crises in the past?
For Siyata and Seelenfreund, the main crisis is the ongoing financial trouble. The merger is the response. They do partner with Crisis Go, using their products, but no major corporate scandals noted. Core Gaming Zakrin.
No specific major crises highlighted in the info we have, but going public always ramps up the scrutiny.
What about communication? Transparency seems important now.
Siyata, under Seelenfreund, started this Ask Me Anything video series with Zakrin, trying to be open. They hired an IR firm too, filing regulations. Positive steps, though maybe the first AMA was light on financial details for some.
And Zakrin.
He's been active in those AMAs, committed to ongoing transparency earnings calls, presentations, social media, acknowledges Core hasn't been very public before, building that communication now, which is vital given how complex this merger is.
Ethical reputations. Any red flags?
Siyata's agreements mention standard ethics, no scandals indicated, just poor financial results. Core Gaming Zakrin, no specific info, but his previous company went public without known ethical issues. Focus seems to be on execution right now.
Okay, the big questions.
Yeah.
Honest. Capable. Shareholder-oriented. Zakrin first. Honesty. Well, the AMAs, committing to that 10% minimum equity for legacy SYTA holders.
Seems open.
Capability. Core's growth, the Fuse Science IPO experience, looks capable on paper. Shareholder focus, aiming for $100 plus revenue, profitability, that 10% minimum stake. It points that way. But true alignment really depends on post-merger success, doesn't it?
Sure. And Seelenfreund.
Honesty. Participating in the AMAs. Capability. Got the carrier deals done. Shareholder focus. Well, the merger aims to unlock value, but it was arguably survival, despite the dilution. Siyata's poor profitability record raises questions about driving shareholder value independently. The merger is the strategy now.
All right, Section 2.2, capital allocation. How do they spend their money? Past and future.
Siyata, historically, big investments in R&D, inventory to get that carrier status over $20 million from 2020 2024. Got a recent Fortune 100 deal too, but funded by dilution, didn't lead to profit.
Ouch. Core Gaming's plan.
Continuous game development, publishing, using that AI, partnerships, focus on execution expansion. Fits their free-to-play model and AI focus.
M&A strategy.
Siyata's biggest M&A move is this Core Gaming deal. They did smaller ones before, Signify, Unit and Assets, ClearRF to boost the POC side. For Core Gaming, M&A is stated as key to growth.
Like the Nubiera deal.
Exactly. That fueled revenue growth. Being public should help them buy more AI gaming firms, expand that huge portfolio and user base.
Share buybacks, dividends.
Side, none. Makes sense given the losses. No cash dividends either. That special stock dividend is just adjusting ownership, not cash payout. Core Gaming, no mention of regular dividends. Focus is on reinvesting for growth.
Return on invested capital, ROIC. Siyata's must have been bad.
Exceptionally bad. Hugely negative. Negative ROE. ROA too. Just shows the capital invested didn't pay off. Value destruction, really.
Core Gaming's future ROIC.
We don't have historical numbers. Future depends on profitable scaling, AI efficiency, M&A success. They're targeting an 8.9% EBIT in the margin by 2026. If they hit targets, ROIC could be healthy.
So the key question on capital, using it effectively to grow shareholder value, Siyata historically.
Clearly no. Losses, dilution, negative ROIC.
Core gaming merged entity, the future bet.
That's the whole investment thesis, right? Better capital use, using AI, the user base, games, public funds for growth, and M&A. Goals are $100 plus revenue 2025, profitability, big goals. Value Scope thinks enterprise value could jump if they hit targets. But effectiveness still has to be proven. High execution risk in a tough market.
And the current low market cap suggests the market sees that risk.
Yeah, likely some skepticism baked in there relative to Core's valuation.
Okay, Chapter 3, Financial Health. Let's get into the nitty-gritty numbers.
Right. Q metrics first. Market cap as of mid-May 2025, around $12–13 million for Siyata. Volatile, though, and tiny compared to Core Gaming's 160M, 186 NEL valuation. Future cap depends entirely on Core.
PE ratio. Meaningless for Siyata.
Yeah, negative or NA due to losses. Not useful now. Maybe a forward PE if Core gets profitable down the line.
Revenue growth. Siyata's was up overall in FY24, but Q4 dipped.
Yeah.
Exactly. $11.06 for FY24, up 41% YoY. But Q4 24 fell 21% YoY. Raises questions about the PE momentum. Core Gaming, though. Strong growth, historically. Strong projections. Core drives the combined revenue story. Risk is sustaining that high growth.
Profit margins for Siyata. Sounds grim.
Consistently poor. FY24 gross margin around 18.4%, down from 32.3% the year before. Big operating and net losses too, $16.02 and $25.03. Low gross margin, high operating costs. Core gaming margins, unknown historically.
Not detailed. F2P profitability varies, depends on monetization. That 8.9% EBITDA margin target by 2026 is the goal. Achieving profit is key.
Debt to equity. Siyata's was high.
Pretty high, yeah. Around 2.79 as of to 2024, up from 1.56 the year before. Shows leverage risk. Merger could improve this if Core brings equity value.
Free cash flow. Siyata burning cash.
Consistently negative FCF. TTM was around $9 to $17 million. Cash balance, super low end of 2024. See it down as 2 cents. Precarious liquidity. Merger hopes to bring positive FCF potential from Core.
Price book. Varies for Siyata.
Yeah, it depends how you calculate it. Maybe around 0.23 up to over 3. Book value per share around $1.30 end of 2024. But with negative ROE, even a low PB is questionable. Merger is the path to better returns.
So overall, is Siyata profitable with the strong balance sheet, historically?
Absolutely not. Unprofitable, weak balance sheet, low cash, high debt, negative FCF, tight current ratio, standalone, uninvestable really. The whole bet now is on Core hitting profitability on $100 Ls plus revenue.
We have a table showing Siyata's rough financials from 2024 revenue, profit loss, assets, liabilities, cash flow. It really paints that picture of struggle, doesn't it?
Definitely illustrates the need for this merger. Okay, financial stability. Earnings consistency, Siyata.
Zero consistency, just consistent big losses, 2019 through 2024. Financially unstable standalone.
Dividend stability.
Nope. No cash dividends ever. That special stock dividend is just an ownership shuffle.
Debt management. Relying on financing.
Yeah, external financing, high DE. Convertible notes in the past. Debt is a big risk given the unprofitability.
Working capital efficiency. Look tight.
Very tight. Current ratio just over 1. Quick ratio really low, like 0.3. Lots of inventory. $3.09 is out of $5.07 current assets. Low turnover suggests liquidity challenges.
Okay, so summing up Chapter 3. Were Siyata's earnings volatile? No. Consistently negative, excessive debt. Yes, relative to ability to pay.
So Siyata's standalone financial stability, extremely poor. Merger looks like a survival tactic and a major pivot.
Exactly. All right, we've hit the midpoint. When we come back, we'll tackle market sentiment, ownership structure, the SWOT analysis, risks, opportunities, and wrap it all up. Stay with us for the rest of this deep dive.
Well, welcome back to the deep dive, analyzing Siyata Mobile's merger with Core Gaming. Let's jump into the second half, starting with Chapter 4, Market Sentiment.
Okay. And the market's view on Siyata stock. It's been a real roller coaster, hasn't it?
Totally. Extreme volatility around the merger news. Huge surge recently, but that was after a massive drop when the deal was first announced.
Yeah, that recent 76% jump on huge volume definitely screams speculative interest.
But the long-term trend before that, awful. Down over 99% year over year at one point. So perception now seems totally tied to Core Gaming's potential.
Right. The plunge back in March suggests initial worries. probably about dilution for the CR holders. The long decline just shows how much the old business was struggling.
What about analyst price targets? Any help there?
Coverage is thin, targets are all over the place, and probably outdated given the company's transforming. Saw one strong buy at $17. Seems questionable now. Fintel had some crazy high targets, likely artifacts from past splits. Honestly, analyst targets need a huge grain of salt right now.
Recent news seems to be the main driver.
For sure. Merger announcement caused the drop. The AMAs with Zaccharin, the transparency push, seems to have helped sentiment shift more positively.
That was that AI comic app launch, too, highlighting their tech.
Yeah, generated buzz. Then Siyata's Q4 FY24 results came out, reminding everyone why the merger was needed. So yeah, news on merger progress, core gaming metrics, that's what's moving the needle.
Short interest. Options. What do they tell us?
Short interest actually climbed a lot end of April. But days to cover is super low because volume spiked recently.
Meaning shorts could cover quickly if they wanted to.
Right. But the cost to borrow shares to short, really high, over 300%, shows strong demand to bet against it. So mixed signals price spikes, but still bears out there.
Options.
Data seems unavailable or non-existent, so limited or no options market, which removes one way to gauge sentiment.
Okay, Chapter 5. Ownership structure. Who owns Siyata now, and how does that change post-merger?
Institutional ownership. Historically tiny, like 0.2% maybe. Very few holders, small positions. UBS took a small new stake. SBI Securities too. Morgan Stanley, JP Morgan sold out. Slight uptick recently might be speculators. Warrants SYTA, negligible institutional holding.
What about insiders? Buying, selling?
Hard to say. NASDAQ data shows not available. Wall Street Zen says 0% insider ownership. One key past investor, Lynn Global, significantly cut their stake below 5%.
That sounds bearish. From a former key backer?
Could be read that way, yeah. Lack of recent insider buys or sells makes it hard to get a read from that angle.
So ownership concentration, mostly retail before.
Almost entirely, like 99.8% retail pre-merger.
Yeah.
Post-merger, big shift. Core gaming shareholders get 90%. Legacy Siyata gets 10% via that special stock dividend. Control totally shifts to the core gaming side.
In corporate governance reflects that.
Yeah. Zaccharin, core CEO, becomes overall CEO. Seelenfreund heads the PPOC subsidiary. Board gets 4 from core plus Seelenfreund. Reflects core's majority ownership. Transparency efforts like the AMAs are good governance steps, but interests of the diluted legacy holders need watching.
Got it. Chapter 6, risk assessment. Let's do a quick SWOT. Strengths, weaknesses, opportunities, threats. Strengths.
Core gaming's AI platform potential for efficiency, AI comic adoption, their large user base, huge game portfolio gives scale, cross-promotion data for the AI, strong revenue growth recently, experienced gaming CEO in Zaccharin, maybe some residual value in Siyata's carrier relationships. Siyata's history of losses, debt, massive dilution for SYTA holders, integration risk. These are very different businesses. Core's profitability at scale is unproven. Dependence on that AI really working. Lack of big hit game titles seems more volume-based.
Opportunities.
Massive mobile gaming market.
Yep.
Being public gives access to capital. Strategic M&A in gaming AI. Global expansion, monetizing AI comic or other AI tools, maybe some small synergy somewhere.
And threats, big ones.
Intense competition in mobile gaming, constantly changing regulations, data privacy, content, monetization, and a big one, potentially U.S. tariffs in 2025.
How would tariffs affect them?
Directly on Siyata's PPOC hardware, higher manufacturing costs, maybe 145% on some telecom gear that could crush margins there. Indirectly on core gaming. Maybe higher smartphone prices, slow adoption, or cut spending money. Server hardware costs could rise too. Plus general economic uncertainty, also shifting player tastes, the hit-driven nature of gaming, high user acquisition costs, AI tech disruption, and just general market skepticism and execution risk. Can they pull this integration off and hit targets? Okay, that's a lot to consider. Chapter 7, conclusion and hook reveal. Let's wrap this up.
So, in a nutshell, Siyata Mobile is transforming. From struggling poppy hardware vendor to AI-driven mobile gaming company via the core gaming merger.
The old Potsy business becomes kind of a footnote, really. The future is all about core gaming.
Right. Core brings the big user numbers, the revenue growth, the AI promise, and the goal of profitability. Leadership shifts to Core's team.
Potential for a financial turnaround, but it all hinges on Core delivering profits.
And they face huge hurdles. Competition, regulations, those potential tariffs, execution risk, and the dilution legacy holders face.
So the valuation now, highly speculative, depends entirely on Core's future success, our assessment.
High risk, high reward bet on Core Gaming's execution in a very tough market. Legacy Santa holders are now minority owners in a totally different company. You'd need to watch post-merger performance very closely.
Absolutely. And hey, if you found this deep dive useful,
You should definitely subscribe to our Stock Analytics AI YouTube channel. We do these deep dives regularly. That's right. Like this video, hit subscribe, don't miss out. And remember, if you're a Stock Analytics AI member, just Euro $4.99 a month, you get priority. Suggest a ticker in the comments for a future deep dive, and we'll put it high on our list.
okay, and the necessary disclaimer. This is just for information, folks, not financial advice. It's based on research available as of today, and we use AI to help generate it. Markets are volatile. Past performance means nothing for the future.
Please, do your own research. Talk to a qualified financial advisor before making any investment decisions. Especially with microcaps like SYTA, there are substantial risks involved.
We've listed the sources we use down in the description if you want to dig deeper yourself.
Okay, that wraps up our deep dive into Siyata Mobile and its huge transformation. We really hope this analysis gave you some valuable insights.
Remember, staying informed is absolutely key in markets like these.
We're curious, what are your thoughts on this merger? Anything stand out to you? Definitely keep doing your own research on this one.
Until our next deep dive, stay curious.